Hey guys, welcome back to the channel. Thank you so much for tuning in. And today I'm going to speak to you about a question that's commonly asked, and that is, what should my first asset class be that I purchase? Now, a lot of this question comes from people who are fully brand new into buying any sort of assets. And there is no wrong answer to this. 30, 40 years ago, real estate was a lot more accessible than stocks for a lot of people. However, today is very different, and I recommend to everybody that the first asset class you should purchase is stocks. There's a lot of reasons for this, but the main reason is stocks offer great risk to reward ratio. The risk reward ratio is fantastic, especially if you're buying ETFs or big public companies. It's like Apple. Yeah, you can confidently say that company's going to be here 10 to 15 years from now. I know right now they're struggling a little bit, but they're still the biggest company in the world. And it shows they make so much money, they make so much cash, and economic factors aside, it's a very, very properly run company. So stocks offer great returns, but also why would I not choose real estate? Real estate's a very hands-on approach. And the problem with the hands-on approach is you don't know if you're gonna get a shitty tenant. You don't know if you're gonna get a bad portion this way or this way. So the most easiest way to buy assets and not have to think twice about them is stocks. Because when you buy a portion of this business, you are buying a business. So you are going to be a business owner. However, you don't have to make day in and day out decisions. You can kind of sit on the back and make sure that the people that you put in charge of running your business, which as because you're a shareholder, are running the properly. And if you think Tim Cook is good at running Apple, then great, buy Apple. Like all of this stuff comes down to just stuff like this. It's stuff that you don't need to think about. You can just invest, and that's great because you don't know what you're doing when you're buying your first investment. Other great reasons why stocks are a great tool is because they offer very good diversification. When you buy a stock, you can buy a real estate company, you can buy a tech company, you can buy a food company, you can buy a grocery store, you can buy ABCD, you can buy anything you want. And so diversification is always there. And another big benefit to this is when you're a stockholder, you will get what they call a yearly review, quarterly review, and that's going to be a report that you get that you can sit on a call with the management team pretty much as they discuss what they're going to be doing for the next following year or quarter or whatever their time horizon is for that business. And you're able to listen in on this information, you're able to put votes in this information, and you're able to look at the spreadsheet, the financial sheet of the business. The reason why this is really good is imagine looking at a business that's so good that it's making billions upon dollars a year, and you're able to study this and you're able to see exactly what their underline is, what their overline is, and how they make money. This is great because eventually, if you want to buy other assets class, like for example, you want to start your own business or buy real estate, by seeing what a successful business looks like, and by learning that, you can implement that towards your information as well. Other great things you also have to remember is it's a very low cost to entry. So when you buy a stock, you can easily do this for zero commission at this point in time, which means you just buy the stock, and it takes one click after creating an investment account. It's so easy, and stocks compound so well over time. I've spoken about compounding so many times on this channel, but it's still you can easily 10x, 50x, or 100x over the course of 30 years on your initial investment. And by investing, it's a sit back approach. If you buy an ETF, you don't even need to do anything. You don't even need to check the financial report. You can understand that I'm putting my money into this, letting it sit around, and I can look at this in 30 years and have a great financial basket that I can look at. And that's amazing. And you really got to understand this portions. With real estate, it's more hands-on. You have to look at underlying stuff. You have to find the tenant. You have to screen the tenant. You have to collect rent. For crypto, you're just looking at a very high volatile asset. So, for example, you're going to see maybe 50% of your entire investment portfolio drop or 50% gain. And in my opinion, at this moment in time, no crypto company actually makes money. You can think about crypto websites or crypto buying platforms like crypto.com, and of course these people are making money because they're charging commission trading. But when it comes to actual portion of crypto, nothing's really you're betting on tomorrow's technology, not today's. But when you're buying stocks, you're buying into a reliable pool of money that is being produced. So there's actual money getting produced by these businesses. There's actually an underlining value to these businesses. And the great thing with volatility is with real estate, it's very hard to sell. So let's just say you get antsy about your investment. It's going to take you 4 months to sell. But do you know a great way to train yourself to be unemotional towards your investment is seeing stocks. Stocks will also grow and fall. And you're going to see your portfolio dip down. And especially when you get bigger and bigger and bigger, your bigger portfolio, you're going to see $10,000 drops in one day, 15,000 drops in one day. And what's going to happen to you? You're going to say, shit, man, I wish I sold. I wish I sold. But because you're doing this, you're going to get unemotional. And you have to really be apologies, still race. Like, you have to really be unemotional to be able to purchase investments at a great rate. You know, don't want to be looking at your investment day in and day out and then worrying about this or that. You want to sit it and forget it. And stocks give you that option because you train yourself not to sell when the stock price is falling and instead buy. You're setting yourself up for great habits when it comes to any other asset class that you're looking for. Most of the time, every time that everybody, what does everybody say when there's a real estate fall? Oh, the market's going to fall even more. The market's going to fall even more. Don't buy yet. Buy at the bottom. You're never going to know what the bottom is. The people who timed the bottom didn't time it. They just got lucky because they bought, and then later on it turned out that they were buying at the right time. You cannot do that and expect to make a lot of money. You cannot try to time anything. The best way to do it is sit and forget it. You buy asset when you can afford the asset, not when it makes viable sense to afford the asset. So I just want to give you that little piece of advice when it comes to buying stocks. And the first investment to stocks I always recommend, because you're looking at a 30 to 40 year horizon, buy an ETF. Don't worry too much about the ins and financials. And then after you buy your ETF, after you're able to look at that get your initial portion of investments, read the book Benjamin Graham's The Intelligent Investor. There's a second version where Warren Buffett also puts his input into it. And you have to understand, so Benjamin Graham taught Warren Buffett how to read financial spreadsheets. Warren Buffett is one of the smartest and most intellectual people when it comes to finance advice. So if you want to learn how to read a spreadsheet and how to actually see profitable businesses from not profitable businesses and good opportunities, why would you want to learn from anybody else other than the best? And you have the opportunity to do that by reading that book. So by you just continuously to learn, and that's the great thing with stocks, because remember, you still own the business, you still get the underlying profit, you still get the dividends, you still get the growth, and you don't need to be looking at, oh, is this business doing good right now, is this business doing bad? You can continue to improve your knowledge on investing while your investments grow. In real estate, you can't do that. If you continue to see how I'm going to, what should I buy, what should I renovate, what should I do this, I have to do it today, because the longer I take, the more money I lose. With stock investing, it's the complete opposite. And the stock market rewards people who are patient. It takes money from people who are greedy and gives it to people who are patient. That is a very big saying. And that's a very good saying. So when it comes to stocks, but again, I can give you guys great stock advice, but I'm not a financial advisor. But I just recommend go search up what are the best performing ETFs, see their track record, see, hey, for the last 10 years, for the last 20 years, sorry, my cat's making a lot of noise. Did this ETF perform well? Well, and if it did, then great. Invest into it. Learn about the management team. See if they make sense. See if they align with your goals. And if they do, great. And they do align with your goals, and buy the ETF. And then you can also continue to learn about dividends. You can learn about this and that. There's so many aspects to the stock market. It's not a very easy, it's very easy to get into, but it's hard to master. And it's even harder to get really, really good at it. And I'm not talking about day trading, because day trading is not stock. That's just gambling. It's just gambling for stocks. There's gambling in everything, including gambling in stocks. What I'm talking about today is purely look for value creation, and you'll find that with stocks. So thanks again for tuning into this one. I am still at 65 subscribers. I love all you guys. You guys do amazing. And I can tell a lot of people from the comments that there's a lot of people in their early 20s, just like how I was. And I'm still in my early 20s, of course. Well, I'm in my mid 20s now. But all these people are really looking for great investments. And then people really understand nowadays. It's very easy to find people who have the same mentality of, I'm going to be patient. I don't need to get rich today. I'm going to be very smart with my investments. And these are the best people in the entire world. And I'll tell you one other reason why I think so. If you are able to, let's just say you're not a billionaire today, but you're able to do the right habits, and because of that, you learn the right skills and the right knowledge. When you have $1 billion, you'll be able to grow that $1 billion into as much money as you want. And it's very true. if somebody handed you $1 million today or $1 billion today, it's very high chance that you'll lose it, especially if you have no idea what you're doing. And so a lot of people find it sucks to not be able to get rich fast, but I think it's the complete opposite. The longer you take to learn anything in life, the better you get at it. And again, look at Warren Buffett. He became a billionaire once he was I believe, over 65 years old, and now he's worth a couple hundred billion. So just goes to show you, again, stock market rewards people who are very patient in the stock market and who look for very high time horizon. And I feel the exact same way towards all of you. I think anybody can do it. I just think it's a right attitude and a right mind, and just again, be willing to learn as much as possible. If you do it, there is no reason on earth why you cannot accomplish it. Everybody else can, and you can as well. Thank you so much for tuning in, guys. We will see you tomorrow, and have a great rest of your day. Bye bye.